Hello everyone. So this side. So today we are going to discuss about the accounts receivable module interview related questions. Okay. Uh, this is the first session we'll have for the accounts receivable module. We'll see what are the interview related questions you will be having for the accounts receivable module. Okay. So let us start. Before starting this session, I would like to to inform all of the viewers whosoever seeing this video, please do subscribe my channel and like my channel. It keeps me motivating to put up new avenues of whatever Oracle financials in domain. You'll have different types of interview questions or modules related information. I'll bring it to the table, to the forum. Okay. So let us see. Proceed with the interview questions. How many types of flexi fields you will have in a accounts receivable module, and what are those actually? Let us see. So basically, there will be two types of flexi field, which is more of like the territory flexi field and the sales tax location flexi field, which is the required key flexi field. The optional one will be the transaction flexi field and the system item flexi field. Transaction flexi field required only if the auto invoicing is enabled, and the system items, so flexi field is required only if the inventory or the OM is installed and should be defined there. Otherwise, it should be set up in the AR itself. Okay. The next one is, what is the importance of batch source in accounts receivable? Well, the batch source control the standard transaction type, which is more of like assigned to a transactions and determine whether receivable automatically numbers your transactions and transaction batches. You can define two types of transactions: batch source, which could be your manual, and imported. So basically, I'll explain more about this process. The sources, we have manual, means you can do manual invoicing within the AR itself. If it is imported, means you can have any kind of integration with the third party. You can select the imported one, or if you have any kind of imported transactions, which is more of like coming from different modules. It could be your order management, it could be your project billing module. So it depends. If you have integrated module which is connected to the AR module particularly, so in that context we can bring in those batch sources, which is more of like the imported in terms of the transactions, AR transactions. If it is of receipts, also you have a manual and imported. If you have auto lockbox, then you have direct debits, which is coming more of like from the customer receipts, which is direct coming to your bank. And we have definitely for those we have imported as transaction source defined for the receipts. What are the different types of transactions in AR? Basically, there are seven types of transactions, as you can see in the AR. Invoice, you'll have debit memo, you'll have credit memo, you'll have chargeback, deposit guarantee, and bills receivable. So to explain more about this, definitely invoice is more of like a standard invoice. Debit and credit memo, it's more of like the standard one, standard debit memo and credit memo. Unlike AP, you'll have plus or minus, where the in AP you'll have invoice and debit memo goes in plus sign, which is more of like you're billing for a vendor, and a credit memo in the negative sign. However, in AR, for the invoice you'll have plus sign, and debit and credit memo stands for the reversal of any kind of receipts. Reversal of any kind of a transaction against you are doing against the particular customer. So you can create a debit memo or a credit memo. Chargeback is nothing but more of like whenever there is a due invoice which has been paid by the customer partially, and there is a new invoice. If you want to create out of the total amount minus your amount received, and the remaining amount, you want to create a new invoice with the due date starting from the you are closing the older invoice, you can create a chargeback invoice. Deposit guarantee, it's more of like used whenever a customer provides any kind of a deposit, and you can create those kind of invoices. And guarantee also same, if you have any kind of a guarantee. And bills receivable, if you have bills receivable against that particular customer, you can do a bills receivable transactions. Okay, so let us see the next one. Describe the main tables which are involved in accounts receivable module and what are the data stored into them. Let us see. You'll have the RA batches all, which is more of like captures all the informations about the transactions batches, and the rack customer transactions all. It will capture the header information about the transactions. You have RA customer transactions, lines, all lines information about the transactions. You'll have customer transaction line GL distribution all, where you'll have the distribution information about the transactions. You'll have RA customer transaction line salesperson all. You'll get the salesperson transaction related information from there on. There is a AR payment schedule all, where we'll get the payment schedule details, AR application payables all. RA interface errors, you'll be getting those errors in the auto invoice interface data, and RA interface lines all. Use this table to enter the header and line information in the auto invoice interface program. RA interface distribution all and sales credit all. You can get respective distribution and sales credit informations from those particular tables. Explain accounting for invoice in advance and arrears. We are going to see that what are the following accounts. When are the following accounts are being used. Also, we are going to discuss in detail level. So we have two types of accounts being used in two different scenario altogether. And there is one we say unbilled receivable, and there is another one we called unearned revenue. So whenever there is a invoicing rule is there, particularly the receivables are accounted on different dates is defined in the rules. Till such time receivables are accounted and the amount is debited to the unbilled receivables. Okay, so if you use the accounting rule, the revenue is accounted in different dates. Till such time revenue is accounted and the amount is credited to the unearned revenue. Okay, so in whenever there is a in advance we are doing a billing, so it's more of like our revenue is not recognized, so it's more of like the accounting entry will be stand like receivable accounts gets debited to the unearned revenue account, right? And whenever we get the payment from the customer, right, after say for example the subscription gets over of 3 months 6 months, right, then the unearned revenue to the revenue account, whenever we receive the payment, and the number of journal entry depends upon the accounting rules which can be fixed or variable. Okay, accounting for invoice in arrears actually. And arrears means we are keep on doing the billing, however our revenue is not yet received. So when we receive the payment of unbilled invoice, the number of journal entry depends upon the accounting rules. The accounting will be more of like unbilled receivables to the revenue. You have to recognize your revenue every month. Say for example there is a 3 month cycle, right? So every month, the accounting entry it will be like unbilled receivable to the revenue. So and finally, whenever you got the payment after 3 months or 6 months from the customer, it will be your the contra entry system will process. It is receivable accounts gets debited to the unbilled receivable. So what is the knocking off? Here the account will be more of like unearned revenue and unbilled receivable. These are knocking off accounts of after our subscription gets over 3 months or 6 months. So we do all this nullifying of this particular accounts. What are the differences? What is the difference in between transaction type and a transaction source? This is very important question. Try to understand this question. See, basically, transaction type can either be invoice, credit note, debit note, or deposit, etc. This also decides whether to account in GL, whether to consider in receivables, the accounts to be debited, credited, and the tax calculation options, and some other options which are defaulted. Transaction source decides whether the source of the entry is manual or automatic. It also mentions whether the transaction and the batch numbering are manual or automatic. If automatic, the last number enter is to be mentioned is to start the automatic numbering. If the source is automatic, that means the transaction have to be uploaded through the interface either from the OE or the legacy system. Then some other options have to be set. So here, source is nothing but from which source you are getting those, transactions, particularly whether you are getting manual or it is coming from some other legacy system or it is coming from your order management. So based upon that, it could be your automatic, transaction source. Types is more of like types is more of like the invoice or credit note or debit note. These are the types based upon the transaction source. We create the transaction types. What is the use of log boxes? Basically, the log boxes, is kind of a service that a commercial bank offer corporate customer to enable them to outsource their accounts receivable payment processing. An auto log box operation can process millions of transactions in a month. Auto log boxes eliminates manual data entry by automatically processing the receipts that are sent directly to your bank. You specify how you want this information to be transmitted and receive will ensure that the data is valid before creating the quick cash receipt batches. So steps for the log boxes are the first steps which involves the reading and formatting data from your bank file to into the logbox table. The second step involves the submitting of the validation program which checks the data into the Autolog box tables for the compatibility and receivables. Once the data is validated, it is transferred into the quick cache table. At this point, you can optionally query your receipt in the quick cache window and change how they will be applied before submitting the final stage step. Post quick cache submitting post quick cache updates your customer balances. So what happens is that I'll explain in detail, more of like if you are using the autolog box, what happens is that there will be a transmission with the bank. Okay, so whenever the customer sends they receive their money to the bank, right? So bank captures the entire day data of all the receipts of the customer receives and send you a one file to the organization, and that file being transmitted having a banking integration with the bank and our oracle server, and we are getting all those information through the autolog box. So what is our role is, in particular, the oracle role is going to create those receipts particularly through the autolog box. Okay, from the autolog box, we create the receipts automatically for all the customers based upon their details of receipt transactions. And further, those receipt can also be applied on the transactions based upon the auto application rule, right? Auto cash rule. Based upon that rule, we can apply that. Okay, so what is the next is what is auto accounting? This is very important concept in the accounts receivable module. Auto accounting is going to be decides or generate what kind of accounts you are going to have. Okay, so say for example, that could be a tricky question. Without auto accounting, can we have our receivable transactions gets accounted? It could be no, because it is derived those particular accounting definitions from this particular auto accounting process, right? Although you can provide, definitely it's not like that, in a transaction type you can go and manually provide your information with related to your receivable, your revenue or freight and tax. However, that's not a best practice. So the best practice will be, in every organization, is to have the definition of auto accounting in place. And these are various definitions, right? In every accounting AR transactions, you'll be getting those receivable accounts gets debited to your revenue accounts. And it could be happen, right? You'll have a freight account and tax account also, right? And you'll have unbilled receivable and unearned revenue also comes into the picture. And it could happen that you'll have the auto accounting clearing also required in terms of if the data is coming from your order management. It stands to be an important feature whenever you provide the auto invoice clearing account. uh, from where these accounts are getting defaulted. So probably you can get the accounts get defaulted from the sales representative, from the transaction lines, and from the transaction types of taxes. Or you can have constant values also provided in your auto accounting process or setup. What is AutoCAS rule set? This is very very important, and try to understand this, why we need AutoCAS rule set. This decides the sequence of the invoice matching rules for the unmatched receipts entered through the quick cash or auto log box. The rules are already defined in the system, like match payment with invoice, or apply to the oldest invoice first, or clear the account. Like these are the various definitions being provided at the setup kind of information. You can provide apply to the oldest invoice first, or the clear the account. So any kind of a definition you can provide while doing the AutoCAS rule set. How do you define this, document numbering for the receipt? Can you have different sequence, for each payment method? So in system administration, you can have different sequences for the different payment methods. Okay. Okay. So the next one is, what is the difference in between unidentified receipt, unapplied receipts, and unaccount receipts? So what are the accounting entries for each of this? Okay. So basically, whenever you will have unidentified receipt, right, the customer is yet to be identified, and so the receipt is not matched. Unapplied receipts, it's more of like, the customer is identified, however, entered, but the amount is not matched with any of his invoice, so there comes the unapplied receipts, right? Unaccount receipt is more of like, the customer is entered, and instead of matching the amount to any of the invoices, it is matched with unaccount option. The option is available as a first item to pick up the invoice, in a pick list of the invoices. So there are three, in terms of receipt, there are three different, definition. You'll have unidentified receipt, unapplied receipt, unaccount. Unidentified means, so far you have done the receipt, but you have not, figured it out who's the customer. So it has become, um, goes into the unidentified one. Unapplied means you have, figure it out the customer. You have already entered the customer. However, you don't know which invoice you are going to apply this particular receipt, and therefore it stands out to be unapplied one. Unaccount is more of like, you do the receipt, however, the customer is entered, and instead of matching the amount to any of this invoice, it is matched to with unaccount option. So it will be open unless until you do not, apply to any kind of, invoices. Okay, so what is the next one? What is the difference in between earned discount and unearned discount? So how do you account the unearned discount? What are the accounting entries involved? The cash discount are mentioned in the payment terms, considering the due date, the receipt date. The discount is automatically gets calculated while entering the receipts. If, however, you want to increase the amount of invoices, you can manually increase it. The amount automatically calculated as per the terms is the unearned discount. The manually added amount is the unearned discount. This, however, depends upon the option given in the system options in the setup. So on discount, it's more of like based upon the setup, we can decide, what kind of, situation based upon this, and discount and unearned discount gets applied to the particular customer transactions. Okay, so we have this much of, question session today. Let us see, wind up the session today. We'll see in the next session further more questions.